Okay, you're here because you want the real story fast. No slough.
Just what matters.
Exactly. And today we're doing a deep dive into the USA PATRIOT Act.
A big one, especially its role in fighting financial crime.
Right. We're using the analysis from FinCrime Intelligence as our guide here.
Good source.
Our mission to pull out the absolute must-knows about this act, how it changed things for banks, for compliance, without, getting totally lost in the weeds.
Sounds like a plan, the USA PATRIOT Act. Quite a mouthful, that name.
It really is.
The full thing is uniting and strengthening America by providing appropriate tools required to intercept and obstruct Terrorism Act.
Woo!
Yeah. And FinCrime Intelligence really stresses this is a direct response, a U.S. law passed right after the September 11th attacks in 2001.
A defining moment.
Absolutely. And the core idea was simple. Give law enforcement, intelligence agencies more power, basically. Better tools to fight terrorism.
So not just about physical security then. It sounds like FinCrime Intelligence highlights the financial side too.
Oh, massively. A huge part was hitting the money trails, the funding networks.
Right.
So that meant boosting surveillance capabilities, making it easier for agencies to share information, and really cracking down hard on money laundering and terrorist financing. That's key for our discussion.
Okay, so let's talk impact on banks, financial institutions. What were the big changes FinCrime Intelligence points to?
Well, Section 326 stands out. Customer Identification Programs, CIP.
CIP.
This basically made it mandatory for institutions to have really solid procedures for checking who someone is when they open an account.
So this is where Know Your Customer, KYC, really got its teeth.
Exactly. The FinCrime Intelligence connects those dots directly. KYC existed before, but this act, specifically Section 326, it formalized it and seriously strengthened it.
So banks couldn't just open an account easily.
Nope. Much bigger legal duty to verify who you actually are, made it way harder to be anonymous in the system.
Makes sense. If you want to stop bad actors, you need to know who's who.
Step one, definitely.
And FinCrime Intelligence notes this wasn't optional.
Not at all. Became law. Then there's another huge piece. Suspicious Activity Reports, or SARS.
SARS, right. Heard of those.
Yeah, institutions now had to actively watch transactions, monitor them.
For what kind of things?
Anything that looks suspicious, potential red flags for money laundering, funding terrorism, other financial crimes, they had to report it.
So their role shifted quite a bit. They weren't just passive holders of money anymore.
Precisely. They became sort of frontline detectors, active players in spotting potential crime.
Okay.
And building on that, the Act also brought in enhanced due diligence, or EDD.
EDD.
Yeah.
More checks for certain people.
You got it. Higher risk customers needed closer scrutiny. FinCrime Intelligence specifically calls out politically exposed persons' PPs and foreign correspondent accounts.
PPs. Those are like politicians, high-ranking officials.
Yeah, people in prominent public roles. The idea is they might be more vulnerable to, say, bribery or corruption, so their finances need a closer look.
Okay. And foreign correspondent accounts.
Those are accounts that foreign banks hold at domestic banks. They can be complex, harder to track sometimes, so, again, more due diligence needed. The Act basically said one size doesn't fit all for risk.
Right. Tailoring the scrutiny to the risk level. Makes sense. What about sharing information? That seems critical.
Hugely critical.
Yeah.
FinCrime Intelligence points to Sections 314A and 314B. These were designed to break down walls.
Walls between you.
Between financial institutions themselves and between them and government agencies. Make it easier and faster to share info about suspected terrorism or money laundering.
Get that intelligence moving quicker.
Exactly. Get the right information to the right people fast.
Were there, initial problems getting that to work smoothly? Sharing info can be tricky.
That's a fair point. There were definitely hurdles. Setting up secure ways to share, figuring out exactly what could or should be shared, legal stuff around privacy and liability. It took time to work through those.
Right, the practical details. Okay, so all these new rules, CIP, SARS, EDD, info sharing, what was the bigger picture effect on how institutions operated?
Well, FinCrime Intelligence highlights a really big expansion of anti-money laundering programs, AML programs.
So it wasn't just ticking boxes on those specific sections?
No, it forced a more fundamental shift, a much bigger focus on compliance, on managing risk across the board.
What did these AML programs actually look like? What did FinCrime Intelligence say they involved?
They became much more comprehensive. Institutions had to develop detailed internal policies, procedures.
Rules for their own staff.
Right. They had to appoint dedicated compliance officers, people whose job it was to oversee all this.
Specific role.
Yeah. And crucial, regular employee training. Everyone needed to understand the rules, know what to look for.
Makes sense.
And finally, many brought in independent audits, basically having someone check regularly that the AML program was actually working effectively. It was a huge investment.
Resources, people, time. I can see that. And you mentioned earlier this was a U.S. law, but did it stay just within the U.S.?
Ah, good question. No, FinCrime Intelligence points out it had a significant global ripple effect.
How so?
Many other countries kind of looked at the Patriot Act as a model, or at least its principles.
Really?
Yeah, they started adopting similar requirements for things like identity verification, transaction monitoring, reporting suspicious stuff. So this U.S. law ended up shaping international standards quite a bit.
Interesting. A global recognition that financial systems needed tightening up.
Pretty much. To fight terrorism, other financial crimes, it became a shared goal, spurred on by the act.
And to actually do all this monitoring and checking, FinCrime Intelligence mentions technology.
Oh, absolutely essential. The sheer volume of transactions. You couldn't manage this manually. Institutions had to pour money into tech.
What kind of tech are we talking about?
Sophisticated stuff. Transaction monitoring systems became key software that could sift through massive amounts of data, looking for weird patterns, things that didn't fit.
Like algorithms spotting red flags.
Exactly. Also, risk-based customer profiling using data to figure out which accounts might be higher risk and needed closer watching.
Okay.
And automated alerts. Systems that would automatically flag potentially suspicious transactions for a human analyst to review.
So technology became really embedded in compliance because of this.
Couldn't have done it otherwise, really. But, as FinCrime Intelligence rightly notes, the act wasn't and isn't without its critics. There were challenges.
Okay, let's touch on those. Privacy is often mentioned, right?
That's a big one. The core argument, the criticism, is that these expanded powers for surveillance, the lower bar for collecting financial data, that they could cross the line.
Infringe on civil liberties, privacy rights.
That's the concern. Critics worried the government could access too much financial information, maybe monitor people not even suspected of wrongdoing. A classic security versus liberty debate.
A valid point to raise. What other challenges does FinCrime Intelligence mention?
The compliance burden, especially for smaller institutions.
Why smaller ones particularly?
Well, think about the cost. Implementing the tech, hiring compliance officers, the training. For a small bank or credit union, that's a much bigger chunk of their budget compared to a giant global bank.
Right, economies of scale. Harder for them to absorb those costs.
Exactly. It was and is a significant operational and financial challenge for them.
Okay, so privacy concerns, compliance burden, any other major criticisms?
FinCrime Intelligence also touches on the debate around effectiveness.
Meaning, did it actually work as intended?
Kind of. While everyone agrees information sharing and monitoring got better, questions remain.
Like what?
Like, how effective has it really been against the super sophisticated cross-border schemes? Have the bad guys just adapted?
Finding new ways around the rules.
Possibly.
Yeah.
And also, does collecting all this data actually lead to more effective investigations? Or is it sometimes an information overload problem? It's debated.
So, no easy answers on overall impact against crime itself.
It's complex. Which brings us to the legacy, really. FinCrime Intelligence is clear. The USA PATRIOT Act fundamentally laid the groundwork for financial crime prevention as we know it today.
So even with criticisms, its influence is undeniable.
Absolutely. And its principles are still relevant. Regulators are constantly adapting them as new threats pop up.
Can you give some examples? How are those original ideas being applied now?
Sure. Think about cryptocurrencies, digital assets. Regulators are applying similar principles, KYC, monitoring, to try and stop them being used for illicit stuff.
Right, the same idea as new technology.
Exactly. Or look at cybercrime, digital identity theft. There's more focus now on monitoring digital transactions, verifying identities online, adapting those Patriot Act concepts.
And terrorist financing hasn't gone away either, presumably.
No, it just evolves. So banks and regulators keep refining monitoring and reporting to try and keep pace with how financing methods change. The core principles remain, but the application adapts.
So the key takeaway here, pulling from FinCrime Intelligence, the Patriot Act was transformative for financial crime compliance.
Absolutely fundamental. If you work in finance, risk, AML. It's a crucial reference point. Its shadow looms large, shaping how we tackle these threats even today.
Okay, let's quickly recap then. The Act brought in huge changes. Stronger ID checks with CIP, mandatory SAR filing, tougher scrutiny with EDD for high-risk clients, and much more information sharing.
Right, which led to bigger AML programs, influenced global standards, and drove massive tech adoption in banking.
But not without pushback concerns about privacy, the real cost of compliance, especially for smaller players, and ongoing questions about just how effective it's all been against determined criminals.
A fair summary. Its legacy is definitely complex, but undeniably significant.
So thinking ahead, and this is maybe something for you, the listener, to consider,
Yeah.
with financial tech evolving so fast, crypto, AI, instant payments, and criminals always trying to stay one step ahead,
Yeah.
how do these core Patriot Act principles need to adapt again?
That's the big question, isn't it? How do you keep them effective against new threats?
While also dealing with those ongoing privacy concerns and the very real compliance burdens.
It's a really tough balancing act. Security, liberty, practicality, finding the right equilibrium in this constantly shifting financial world. That's the challenge going forward.
Definitely something to think about. Thanks for taking this deep dive with us today.
Hope it provided some clarity on a really important and often complex piece of legislation.
We hope it gave you a clearer picture of the Patriot Act and its lasting impact.